Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey, welcome. Good morning to another live stream of 0x Research. Once again, and as always, my co-host Boccaccio joining myself. And we've got the boys from Figment Capital today, Jim and Dougie. Dougie making the rounds on CT with his latest post, which I think we're mainly here to talk about today, that topic and dig into it. But glad to have you guys on. Jim, we had you on recently. Glad to have you back.
I don't know what I'm doing.
As a duo.
I don't know why I'm here, but I'm happy to be here. A silent member.
Well, it's good to get people in duos, or else the main person gets stressed out. So you're kind of backing up Dougie to an extent here.
By no means is he backing me up. We're just hanging out. We shoot the shit all the time. So I'm glad Jim was able to make it. Jim was supposed to be in a car right now, and he changed everything to be here. So I appreciate that.
I really appreciate it.
I want to be on my regular guest arc for 0x Research. I spent too much time in that chat to have it go to waste. So I'm glad it's finally paying off. Thank you.
Yeah, and also Jim got me into the chat. So I owe Jim for being here because he was talking the world of you guys. And I was like, he won't shut up about the 0x Research chat. Like, what is so good about this? And eventually I joined and I was like, oh, this is a great place. Like, I still can't even conceive how it's possible. A public chat and a lot of amazing people from the space in it, just saying completely unfiltered thoughts. Like it's awesome. It's a sacred place.
It is pretty good. It is public, but I do kick out around 50 to 60 people a week, which is why I think it's. I think you have to be quite aggressive, and even then, it's gotten relatively shit. We also have a third guest who made it at the very, very last minute. Noah, thank you for coming on.
I heard crypto was dead, so I had to join.
This is Noah's dream. Dougie, you had Jim said that you've had a bit of a media run over the past few weeks. I'm going to ask you to do this one more time, I guess. With your crypto is dead piece, can you give like a free bullet point takeaway for the listeners who may not have read it? And then we'll get into the meat of it.
Yeah. Media run is definitely a bit of an exaggeration. I've hit on a few different things, but the 3-bullet note summary is, since I've been in the space, which has been for a decent amount of time now, it feels like the majority of people in our space have just been building for crypto natives. And the default assumption for a lot of people was that the world would just become crypto native. And I'm here to suggest that is not going to happen. I think the people who want to be crypto native are already crypto native, and we need to start building for the rest of the world because that's going to happen, whether we like it or not. There are large companies who are choosing to build on our rails today and build the things that I believe mass adoption look like. And I think that unless the crypto natives, such as ourselves, recognize that and start going beyond our insular world, that will just largely be left behind in this mass adoption equation. I'm not here to say crypto natives will just all go to zero, but I do think there is a much larger pie that is right now pretty separate from ours, it feels like. And unless we have the intention and recognition of that, then the next few years will probably feel more like the last few months have, despite everything happening around us.
I think that makes sense. I have one gut reaction the moment that I read this, because I've heard people say this, like, oh, don't focus on crypto natives, focus on the bigger picture. And sometimes I feel like it comes from this perspective of kind of saying something but not really saying anything. And this isn't, I'm not saying you're doing this, but I find sometimes people say it, right? They're like, oh, don't focus on the small thing, focus on the big thing, as if it's easy. The only thing here is crypto natives, from my understanding, bring most of revenue to applications, right?
Yeah. So I want to put the condition out there. I'm not saying abandon crypto natives. I actually think a rational business goes after its most proximate customers first, builds out initial traction, and then moves on to its second most proximate customer. Where I think we are not across the board failing, but certainly falling short, is identifying and going to that next proximate customer. I think for most crypto native businesses or companies building on chain, it makes sense to go after people who are already on chain and they give you great feedback. They help build out your initial customer base. And then when it's ready to go beyond, you should absolutely do that. And I think a lot of people just struggle to understand what going beyond the little niche that we're in looks like. And that's what I'm kind of saying when I'm saying like move on past crypto natives. It's not like you got to start from somewhere. You should probably start where people are most proximate, but you need to go beyond that eventually.
Do you think it's Jim, please?
I was gonna say, like, I had like two reactions to Dougie's article. And one came like kind of more like with a conversation that actually like reminded me of a conversation I had like months ago, which is that like most crypto teams, like they have like a BD person or two, right? And like the BD person's job, like as I've come to understand it, is like try to find like other app builders or like whales. And like I was talking to a buddy who he's been in crypto as long as I have, because I brought him, he's like my best friend, and like we both like were buying ETH and BTC and like I don't know Litecoin on GDAX back in like 2016 on Coinbase, right? And like he's like, oh, like everyone's just missing salespeople, right? It's like who's the salesperson who's like selling to like the other people? Like BD and sales are not the same. They should essentially be the same thing, but they're not. And so there's never been, maybe it's because of DAOs, or maybe it's because of like how the industry initially kind of like was created. And maybe, I don't know, you've been paying a lot of attention to like the Aave stuff, right? But like, whose responsibility was it at any of these organizations to go like, okay, like we're going to pitch this to, all right, we have like, we have $10 billion of like deposits. Like, where do we go next? And like, how do we expand beyond like this? And when can we, and how do we? And it seems like we're starting to see that everyone's moving really quick. Maybe it's regulatory, maybe it's other things, but like I think a lot of these companies are going to need to like kind of change like what Dougie's trying to say is like grow up or move over, because like you're going to get replaced and displaced if you don't change. And then I think the other thing of it was like there's this like kind of sentiment that like in the past, like for last bull market, like if you owned crypto, there would be a rotation into your token. So if you were holding crypto tokens and it hasn't gone up yet, like don't worry, slugger, like your number's coming up like right after that, right? Like either the next one or the one after that, right? And I think what we're seeing is like a lot of people are pretty upset and pretty depressed not because crypto isn't winning, but because like, hey, just because crypto wins doesn't mean that your token's going to catch a bid. In fact, like some things might go up 3 or 4x, and like your thing might just go down 80%. And like that's kind of not how history has trained the crypto natives to think.
I wonder if like that BD sales thing that you said is because things have tokens. Because in my mind, the only like people I think probably actually do sales is Privy, Phantom, who like actually go out and do B2B sales, versus I feel like a lot of I know there's money going around, right? Like when someone says they partner with X protocol, there is money being exchanged, probably tokens being exchanged. But I wonder how much of it is like not actual sales, but the thought process is like, how do I make my token go up through a partnership announcement, as opposed to like trying to sell to. But I guess the more fundamental issue here is there's no like defined customer base for crypto products. Like they're kind of B2B and kind of B2C as well. It doesn't, to me, it's like as a blockchain, who is your customer? It should objectively be protocols, but you're really monetizing the user, which is a horrible way to.
Your customers are your applications. Like that's how I think about it. I think blockchain's customers are their application developers. Like you're a platform, and like you should be selling to the applications, and the application's job is to like bring the users and the use cases, like the use cases. Like that's how I've always thought of it. It's like if chains are talking directly to users, and like ultimately over time, like that probably kind of goes away.
Because like this is not a perfect. Oh, I think I have a lag. But I perfect analogy. But could you imagine if AWS was going after me? Like, it would make no sense. Like I don't even know which websites I'm using are on AWS. and like it's not, again, not perfect analogy, but that's what Jim's saying is like AWS's customers are people who would build on AWS and need it to build their applications. It'd be crazy if they're going after Dougie who can't code.
No, yeah, I think that is the fun. One more like additional thing here is the BD thing. This is separate to this, but I mean, BD and growth to me have historically been fake roles within crypto, right? Or at least like a large part of it. I imagine there's like 2 to 3 people out of, I mean, like the simplest example here is Monad, right? Like, I don't know if anybody here is an investor in Monad, but just like going off my gut, I know a lot of people who work at Monad doing growth, and the like example of them doing growth is they tweet really well, right? They're super funny on the timeline, and I think that's great. But like, surely that can't be growth. And to me,
it's not BD. It's like I think it's like I think I have an idea for Monad, and I'm going to be talking with Keone about it over the weekend. Actually, I'm going to pitch a crazy idea to him. But like, and he's probably telling me I am that it is in fact a crazy idea, and like, thank you for your thoughts and goodbye, crazy person. But like, you're right, it's not like you need to be going out and finding businesses and developers that are like that either have successful businesses and want to put them on chain, or on chains that like are not servicing you properly, and you should move over here. Or like, I think the other thing is like asset issuance is like the most valuable thing that any of these chains, like that's what every single chain needs, is like asset issuers and applications. And those are like, if you're not doing either of those things, then like, why do you need to exist? Like, if you look at, I think Hyperliquid as an example, like Hyperliquid is in a pretty weird spot as a chain, as an L1, because like, number one, the biggest product there does not require any assets other than stablecoins, and so the Hyper EVM is like it's functional. Like, I think almost nobody uses it. Like, I have used it, but like the question comes like the one thing that was like really a bright spot and a possibility for Hyperliquid was the spot trading was starting to pick up, and I honestly thought that like, and I thought it was going to be really big, and I hope it is. I know units kind of like maybe moved over to like doing spot plus like equity perps, but like you need a team that's like really seriously focused on bringing as many spot assets over as possible and making that an insanely liquid platform for all spot assets. And like you saw with the Monad launch, Solana take a real swing at it, and they did it very successfully, and like they're doing it again with Zcash, and like that turns into like actual users coming over to Solana and trading all assets on Solana. And Hyperliquid had a head start with Unit, and they it seems like took their eye off the ball a little bit, or found something shinier, and decided to go into something that's going to make more money, like which is equity perps. Or maybe that was always the plan, but like they need a team that's like focused entirely on bringing all the assets and spot assets and having listings like you do on Binance and like you do on Coinbase. Like you need to be listed on Hyperliquid.
Yeah,
and that should be an event of itself.
I want to pull Noah in for a second. Noah, I want to ask you, A, I guess your general thoughts on the Dougie's article, and B, your general thoughts on this, like how these things are going to go going forward. Because what Jim mentioned, like spot markets, Hyperliquid's revenue is directly related to that stuff, but also as the token price goes down, because it's like there's no secular bear market, and like for one token, all token prices go down. People don't want to trade, and then that just leads to worse and worse for perp taxes, and which is like also kind of ties into how you're going to bring it into the real world, which I feel like if everything is like an Ouroboros, you can't really bring it into the real world.
So I fully agree with everything said in Dougie's article. So that's one point. The second is with regards to sales and BD and crypto. I think 90% of it probably is being accurately characterized on this podcast, but the 10% that is doing a good job are the companies that you've all heard of and probably are users of. So I think part of it is just a function of like quality of team, and that like within the lending market, I don't know a single team that has material AUM that doesn't have like a very built out CRM. Morpho is like a great example where they know what assets we have in our fund and what we're willing to deposit on chain, and they ping us whenever there's a new opportunity. And when I speak to yield funds, my sense is that they've spoken to anybody that has an opportunity for them to deposit capital in. And so, like, on one hand, I agree there is a lot of lack of productivity within the BD side, but on the other hand, I think one of the issues that we're facing is that from like a pure product perspective, it works for crypto natives, but it doesn't work for non-crypto natives. And like lending being the example that I'm probably most focused on, like Camino just recently allowed for funds to have their collateral stored in Anchorage and borrow on Camino. Like that's a big accomplishment that opens up the market, whereas previously many funds just never could deposit capital on Camino to begin with or weren't comfortable with the risks. And so I think a lot of like the expansion of the market opportunity is also about the form factor that it's delivered in. And like the hurdle to go from delivering to crypto natives versus delivering to like traditional finance or consumer is a large development lift. So that's the other thing to consider, is that like if you have a product that you can't really easily sell to the average consumer, the average TradFi person, you have to like look back at your developers to go through a product cycle and build the required pieces for them to get for the BD people to then go out to the average user to then bring them in.
I think if I could just jump in for a second on that, because I agree with everything Noah just said. Like part of what motivated me to write this article was like, this was the first cycle that actually showed me we do have the means to get in front of people who are not already on chain. And the example that I think best demonstrates it is Moonshot. We can argue over whether or not the substance of like what Moonshot enabled was meaningful or not, but like there were people who went from having no sort of on-chain wallet, likely had never transacted on Solana before, who downloaded Moonshot, uploaded funds via Apple Pay, and then bought a meme coin on chain rather quickly. Like I think within like 10, 15 minutes. And before, if someone was just getting involved in crypto, they were going through Coinbase or name your centralized exchange. And this was for me like one of the first times I saw like people just go directly on chain, which shows me that like we now have the actual means to do this. We just lack the intent in a lot of places. And like for sure, it's not like I'm not I'm not an engineer. Like it's not an easy thing. It's not like a trivial thing to do, but we do have the means to do it. And if you look around, like there are plenty of examples that show that. And so that's why I think like now is actually the time, because it is possible. It's not just like there's some massive barrier that's going to take a Herculean effort to overcome.
I think that makes sense, but is it Moonshot or is it, I assume they're using either Privy or Turnkey on the back end. Like is the...
Yeah.
They're using Turnkey. I think they're using Turnkey.
Right, so it would be...
Yeah, there's
like there would be Moonshot actually didn't do that well, but like
well, it was the app that did it.
Yeah,
the point is like the tech exists, Turnkey, these things, but now the applications who come in and seize the opportunity can benefit from it. And so Moonshot is an example of like more applications that I think will come to exist. People who aren't building the backend tech themselves, but instead using that backend tech to get directly in front of users who likely have previously never transacted on a blockchain before. And Moonshot did that, felt like overnight. Obviously took a lot more time, but they're a clear example to me of someone who did that really well.
Yeah, I think that makes sense. Jim, on your monad trading point from Solana, I looked into this the day of because I was coping about Hyperliquid not getting most of the volume. But when I looked, Solana made around $112 off like the first day of trading, versus Hyperliquid made around $7,000. And then I think Meteor ended up making like $500 off just that first day of trading. So that's like it's great Solana is bringing in asset issue. And it's something I argue internally at Blockworks sometimes, and half of us lean into like, you just bring in trillions of transactions and it'll work out, and the other half's like, these guys just can't make any money at scale.
Yeah.
So what do you like? I think they should charge rent to applications. I think you make applications pay you money, like
there's
revenue.
I mean, that's a great idea, or at least create like I responded to Luke Cannon, I think at some point this week, and there's this article that I really, really want to write, and I am scared to write a little bit of like the backlash that I'm going to get. But I think what you want to do is you want to build a competitive marketplace for teams to like. You want to be Hyperliquid should try to be as neutral as possible, and create a competitive marketplace where the best team wins to both bring on new assets and are like or at least equally supported to do so. And like the article would like argue that like that hasn't been the case, and that's potentially hurt has hurt Hyperliquid in a couple different cases where some king making seems to have like transpired. I don't know if you heard me or not, but like some king making has seemed to have transpired, and like those are like repercussions. Like there's going to be challenges as a result of those decisions that were made. And so I guess like it's more just like playing the long game. I mean, like so Solana, does that include the DEX that was doing all the swapping, the $1,000?
It's just based off median transaction fees.
Okay. Okay.
Which I assume is probably wrong. It should probably be higher because I assume median transaction fees are just other things versus like I imagine most of the Monad transactions were actually.
And so like, I guess the idea of like, hey, like how valuable really was this? It was like, I don't know. I think it was like a moment where Binance didn't get a listing for Monad spot, right? And all the volume was on Solana. And like, I think, you want to house all finance, you got to kind of be the fastest horse and you have to be the biggest horse and you have to kind of be proving it and doing it. And like, my take there would be is that like they missed one of the bigger opportunities and like, supposedly, and Solana took it, and Solana is trying to be the NASDAQ on chain. And so like, which one after the Monad launch looked more like, I think NASDAQ on chain and housing all of finance are essentially like the same thing. And so like, which one won this round? And I would say Solana won this round. And so what happens with the next large, like you can TGE, or you can have a listing that does as much volume as a centralized exchange, and you're going to think about where to launch the token. And I guess if it's a L1 or L2, you kind of hope it's on your own chain. But if it's anything else, like you start to go as a team that's launching a token and wants to have a liquid market and maybe doesn't want to pay 5% of its token supply to Binance or more, like where do you go? And like, I think you're going to eventually say, I want to go where all the other successful high volume transactions have been done. Where have those been done? And you're just going to look at like the history of like the last like 5 or 6 or 10 or 20 or 100, and you're going to be like, oh, this is where I'm going to do it. And that's, it's like it's kind of been for XPL. It was Hyperliquid, and for Monad it was Solana.
Yeah, that's right. It's not. We have a younger analyst named Shonda who wrote something on this, and his argument was you actually don't make any money if you're the NASDAQ versus like Robinhood, et cetera, make a lot more money. But
it also, like, what else does it like allow for, right? And like I think like with the most recent thing that Hyperliquid just like there's going to be able to do basis trading now, right? And you're able to use like other assets for collateral. And so like that opens up it opens up more opportunities down the road if you have these at spot assets, and like it commands like probably a higher valuation and allows for users to like house all of their assets like on this, like they're trying to compete with like not just like with Binance and like you have to have spot volume also. You can't ignore that. You're not competing with anyone if that's the case. You're just like GMX.
Yeah, I think I like a lot of what you're saying here, Jim. My thought process on like this Sol versus Hyperliquid thought is we've seen Solana have success on the spot side. Prop AMMs have been a big piece of that, and now it's like, can they translate that into perps and other products to have real like meaningful success in a competitive way with the rest of the market? Or maybe like relative to like a Binance, for example, which we've seen on the spot side. And the Hyperliquid, it's been the complete inverse, right? They've seen the success on the perp side and have had trouble converting that to spot.
I mean, Ellipsis Labs is coming for you, and they have a prop AMM. So
I think to kind of step in, I think what Jim's point is, and I tend to agree with it, is I look at a lot of what has happened on Solana as a result of meme coins existing on Solana predominantly. We've seen like meaningful strides taken in on-chain DEX design as a result of the volumes and on-chain participation that happened via meme coins. And again, like you can argue meme coins lack substance, sure. But what they did do was bring a lot of innovation around them, because people who wanted to innovate on-chain and swaps and DeFi looked at the place that was dominating in user volumes and daily transactions and like, I'm going to build there. And now we have prop AMMs. And now we have a real chance where Solana is like the best place to swap on chain. I think that's still too thick TBD. But Jim's point is like, if you win the assets, you win the innovation around it. And that's how you end up being the long-term winner. And we can argue over how much value that actually captures, but I would rather be in that spot and then figure out how to capture value versus not having any assets to even think about capturing value from.
No, that's fair. No, I asked you last week because I do this quite a bit where Noah mentions something in the chat and I don't really get it, so I have to bother him. How do you see, do you think Hyperliquid is not monetizing it correctly with all of their business? Or do you think, I guess the question here is like, I don't particularly understand the NASDAQ versus Robinhood thing that much, but surely they can make more money apart from just fees, right?
I mean, it's nuanced. I feel like comparing traditional financial market structure versus crypto spot financial market structure is probably not easy to do apples to apples, given that a lot of the ways that fees are accrued is a function of regulatory capture. So like when there are monopolies in certain parts of the stack versus like perfect competition, that is almost purely a function of regulatory. But I agree that like owning the user is probably more monetizable than being the back end. And I also agree with the general perspective that this is a winner take most market and the addressable market is really large. And although nobody seems to be capturing it too well today, besides Hyperliquid, because they're monetizing perps volume, like there probably will be the ability to monetize in the future. Like, you just believe in Moore's law, the cost of computation posting on a blockchain should continue to decline. And, you know, last cycle we were all complaining about fees. Now I don't really see it too much. If fees go down in order of magnitude, could Solana just arbitrarily say, you know what, all of the marginal cost compression from here, we're just going to take that as our margin? I don't think anybody's going to push back too much. There's probably going to be some political debate around it, but it doesn't hurt the user experience in the same way that if these blockchains try to monetize, 3-4 years ago, it probably would have been a large barrier to maintaining market share.
Yeah,
I think that's a good point. Like if I think of Ethereum on the fee piece of this, you had the complainers or people up in arms about paying several hundred for a transaction, and then I think people had the complete opposite view when they pushed all the execution off to L2s, and they say, well, actually ETH doesn't make enough money now from this. Like complete reverse of what 2021 was.
Yeah, but there's a very real world where, let's assume meme coins are dead, and let's assume that like that form of activity where you have to be first, so you have to pay whatever, like you have to pay the 8 to 10% fees that you have to sometimes pay if you're just chucking one Sol, whatever. Then there's a world where Solana is also in that boat where it just doesn't make enough money, right? Because no one wants to pay 8% fees to go long to buy spot monad. Who like you'll just wait, or like no one's gonna pay the Jito tips or whatever. So it's, I guess, like with the new perp stacks, I think it's the Ellipsis Labs guys, right? If I was Solana, I would say, look, like we'll make you guys the official perps DEX, like we'll back you and whatnot, but you have to pay us 5% of your revenues. I don't even know how this would work on the back end. It would have to be like a social thing. You can't change the code, but because that's what Hyperliquid is doing, right? They're like, okay, we're gonna push unit, but you have to pay us 50%. It's objectively also not the greatest thing. Like Lighter is just putting all assets themselves, capturing 100% of the fees. So Hyperliquid was very much like, okay, well, we can't deal with this. So you do it. You're like semi-king made, semi-enshrined, because we're giving you guys the USDC tickers. I just want 50%. They could have taken 80 probably, but they took 50. And then why shouldn't Solana do the same thing, but instead they take 90%? No, not 90. They take 20%, 30%, 50% even. And then there's no like issue where you're like, oh, I need to have like 1 billion transactions. No, you don't. You just need a regular amount of transactions, and you just take a cut out of like whatever people make money on.
Go ahead, Noah.
It's a dangerous game for Solana to enshrine an application at this point. I think it's like an order of operations question where when Hyperliquid came to be, it started off as a perp DEX. And so they had a lot more ability to centralize and make commercial agreements. Whereas if Solana King makes an application, I think every developer, not necessarily within that segment, is going to ask, will my competitor be king made in the future? And does this mean that Solana is like risky dependency for me to build on top of? So I don't know. I don't think you can go the path of enshrining applications. I think it's really quite bearish if Solana were to do that.
Yeah, I feel like a lot of builders on Base feel that way with how like Coinbase has like arguably encroached a bit there. And people are like, oh, am I going to be the next thing that kind of just gets picked off? Am I swimming upstream against a force I cannot possibly defeat? And I'm not going to like admit that like it's impossible to kind of like enshrine, but I think like so far the versions of it that I've seen often create more harm than good.
What about, I hate bringing this up because Jim's going to bring up Euphoria, but what about building out an incubation program and you take equity in the products or something like that? Like there has to, I don't know, I've spent a lot of time the past 2 weeks thinking about how to fix this thing because these guys are like, there's the only reason Hyperliquid is so bull posted. I love Hyperliquid, but the only reason it is it's the only application, it's the only chain that can monetize itself properly, and that's because it's an application and not a chain. It just has a chain theoretically in the back end, not theoretically, really. But so there has to be another way to think about this that works.
Dougie and I have been thinking about it a little bit. I think we're still thinking about it. Like we haven't found the silver bullet or anything like that just yet, I think. And I don't think there's going to be like a one size fits all, but like, I mean, like Solana Foundation and Solana Ventures, like for up until FTX, and I think it still exists maybe in some form or fashion. There are certainly ways to like, if there's something that you really want built, to like have someone talented build it. The challenge I think has been historically is there's like a lack of talent in crypto. So that's like number one. And number two, like you really want people to build stuff that they want to build. I think like, I think the world of the Ellipsis Labs team, they're incredibly talented and smart and like they execute really great. I would be curious, I think what I kind of understand, I don't speak with them at all, so like I don't really know them. It's just what I see from the outside looking in, but like you can sort of start to see the pieces of the puzzle that they're putting together, and like how they're going to approach the market structure of Solana in a way that like they can win quite handily on like both spot and perps. And so it's tough. Like the teams that want to build something and are talented don't need the help, and don't need the enshrinement. And that's kind of who you want building on your platform. And like, if you are going to enshrine something, like I guess what I'd say is like, you kind of get, hey team, you kind of get one shot. Like, you don't get multiple shots on goal here. Like, oh, I want to be the enshrined version of this. Oh, actually, this is more interesting. I want to be the enshrined version of this. Like, you can't do that. I'm going to do that. And I think that might be part of the perceived issue with some builders coming and building on Hyperliquid right now.
I think that makes sense. How do you, Dougie, one thing you brought up in your article was infrastructure layer becoming more and more boring. How do you, I guess we have the pleasure to talk to both the VC side and the liquid side here. How do you, will you guys keep investing in infrastructure layer going forward is probably the best way to ask this, but realistically, like however you want to take the question is fine.
Yeah. I think the short answer is yes. It just looks different than how it did previously. We actually had a pretty conscious realization of like, because like our fund originally was focused on infrastructure. That was like what we were known for. And we've definitely since like become a lot more generalist over the last few years because we realized we have to start investing in applications that's going to build on top of all this infrastructure we've invested in. When we had a conscious realization of, I don't know, probably a year ago, honestly, is like, there's still room for infra, but it has to be applications first. And you invest in the infra that enables the applications that you believe should and can exist, but can't due to some missing piece. And the turnkey example is actually a great example. It's like, now that turnkey exists, Moonshot can exist. And turnkey is a pretty boring business, but it is a good business. And if more people start building applications that do volume on turnkey, great. And like their margins are never going to be like Robinhood's margins for, comparison, but like for them, it's going to be assuming they can be successful in execution, like a pretty lucrative business to continue forward with. And so I think like turnkey is like closer to the model, in my opinion, of like what future infrastructure investments look like. It's going to be fewer like general purpose networks. And that for most of the space's existence is dominated infrastructure investing.
I think that makes sense. No, how do you underwrite?
I mean, historically, we just chose not to invest in infrastructure. And I think that's partially a function of like liquid market assumptions for infrastructure versus venture market assumptions, in that a lot of the projects that launch tokens that are infrastructure related projects are not focused on monetization. Their token is their monetization. And so when we're going in, we're trying to build a cash flow model. Over the past couple of years, have spoken to a lot of the infra projects with tokens. And I've asked like, okay, so what's your revenue? And they're like, we're still trying to figure out how we're going to monetize, because for the prior several years, nobody actually asked them. They had their token, it traded well, and they were mostly just focused on market share. And so it's all to say, like, for Oracle providers, Chainlink is a great example. Like, what is the real monetization opportunity? It's meaningful, but is it meaningful enough to support 5 to 10 Oracle providers all focused on Oracles? Maybe, maybe not. I think when all their tokens trade well, then nobody asks the question. When they don't, they start asking the question. And if you're not monetizing today and all of a sudden you're being asked by your investors to start monetizing, like, you don't really know what the customer's willingness to pay is. And so it's all to say, like, I'm now much more interested in investing in infrastructure tokens than I have been for the prior 3 years, not because I necessarily see any opportunity today, but whenever I speak to founders, their tokens have gotten hammered enough to the point where like they get it. Like, one, the tokens at a price where like if they monetize correctly, they can justify their token price, whereas prior there was no point in trying to monetize because then you're just trading at a high multiple. And two, they understand that because they've gone through so much of their runway that it's kind of an existential risk for their business. So I don't have any infrastructure investments that we're making today, but it's definitely a much more attractive environment in the liquid space than it has been for, the past 5+ years.
I guess the one thing that like I know like USDH, like, so Mega ETH is an investment of ours, right? They're a portfolio company of ours, and like they announced USDM shortly after USDH like auction had been announced. They've been working on it well before the announcement, right? So it wasn't like hey, we're just following the Hyperliquid's lead here. But I also saw, I remember when those two announcements went out, like Mert also kind of like tweeted like, oh, hey, like maybe this is like a good idea. And so I think like that's like the one area of like, if you have all these stable coins, if you look at, I mean, like Circle is just getting like a free ride here, right? On Solana, on all of these chains. And it's like, okay, can we figure out like Athena seems to be moving in a couple different directions, one of which is like stablecoin as a service. There's other stablecoins as a service companies, and like, there's a world where like Circle also becomes stablecoin as a service, like and the market can push it in that direction, I think, over time. Or they can, or they like maybe lose market share over time, and you have to make a pretty tough business decision at that point. So, I guess ARK is maybe their response to that, but like, like that's a way for chains to monetize. Like you can build a wallet. Like Tempo is looking at ways to monetize as well. It looks like they have their own model, but like you can launch your own native stablecoin. That seems like one way to monetize in high interest environments. It's obviously going to be more lucrative than in low interest environments, and maybe having some other features that applications want to use, either out of the box, that really make for like a really holistic sort of ecosystem feel, are worth exploring. Like an in-chain wallet seems like and you connect to this and you can just connect one thing and it all looks and feels the same and it feels very like homogenous. Like that's another way. Like you look for, fortunately, like for some of the companies that we talked about earlier, like that's kind of the way that you monetize, is like, is there infrastructure that we can bring in-house, or are there apps that we can bring in-house? And I think if I was like, I would try to figure out ways to like probably bring the infrastructure in-house and let the builders build.
The stablecoin thing makes sense, but for like the past 3 years, we've just said like, oh, we don't want fragmented stablecoins, so you need USDT and USDC everywhere. And then now on the crypto native side, chains are like, oh, we just want our own native stablecoin so we can internalize the yield. Even though I'm, contrary to popular belief, I'm not a rates trader, so I don't know where they're going to go, but I imagine we're going to see lower and lower the treasury yield. And on the other hand, every single, seems like after Klarna launched the stablecoin, it's like, okay, like I guess everyone's launching a stablecoin, so we're going to this place where there's going to be a billion stablecoins, which first of all sounds like a nightmare. And the second thing is, to me, I'm sure someone here is an M0 investor, but that's like their whole thing, right? Like and it's not like a Athena thing. I love Athena. I don't know if it's a great dollar product. I think it's a great dollarized product, and I don't know how it will work out as like a stablecoin as a service thing. They're doing it a lot now. I've seen multiple proposals across chains and stuff, but I don't know. Surely there's other ways to. I don't know. I'm just going somewhere random. Danny, maybe you want to save me here.
Yeah, I'll save you here. I wanted to give a quick shout out to our sponsor for today's stream. Thank you to Uniswap for sponsoring today's stream. The Uniswap Trading API solves the problem of adding crypto to your products without the hassle of needing deep crypto expertise, ongoing maintenance, or liquidity aggregation. The Trading API provides access to the Uniswap protocol, which has processed 3.3 trillion in all-time volume, handled over 465 million swaps from more than 25 million addresses, all with zero security breaches. Developed by Uniswap Labs, the US-based team behind one of the most used DeFi apps, access some of the deepest liquidity in crypto, combining both on-chain and off-chain sources for optimal pricing. The same liquidity that powers billions in swaps, now available via a single API. Let's get back to it. You were going on a bit of a tangent there, Bach, talking about different products, monetization. We were talking about stable coins, every chain launching their own stable coin. I don't know how we want to tail this back in. I do think that there is a root question there of like, it gets back to like maybe your original point, Dougie, in your article of, I don't know, look to the problems and like invest in some of these teams that are like solving some of those core problems. And it's like not necessarily a crypto product or a crypto team, but just like this is a good app or product and someone will use it. And I think to that point, when I think about like okay, there's 1,000 chains and maybe all 1,000 chains are going to launch a stable coin. I think probably like the needle through the haystack of that for the user is that ideally, like some of these winners are going to be the user doesn't even realize that's happening. It's just like, okay, they sign up for this cool new fintech app and maybe there is a unique stable coin that like underpins their dollar balance, but they don't know, they don't care. They just get like, they get 2% on their cash per year. And it integrates other great products inside of that app can monetize, but the user like loves the experience and that's fine.
Yeah. Yeah, I mean, I feel like a lot of my article was just oriented around like applications. There's the debate we just had is like, what do protocols like L1s and L2s do in this world when like these conditions hold true? And I don't know. That's a whole separate article, I think. But I do think like the emphasis is on like applications being the ones to like get in front of everyone else. And people start using the infra without consciously realizing it. It's like when someone goes to Starbucks to buy a coffee, they don't think of themselves as going to Square to purchase the coffee. They're the Starbucks coffee user. That's what they want. But there's a lot of things going on behind the scenes that allows them to actually go and buy that coffee. And it's a stupid analogy, but like I do think like a lot of on-chain interactions will feel closer to that than what they do now, which is I'm going to go on Solana because I have a bunch of Solana and I love Solana. And I'm going to go use these different applications because they're on Solana. I think it's already going away now, but like when I first got into crypto, that was literally the user journey. It was like, which chain do I have a bag of? Okay, I'm going to go do everything on this chain to try to accrue more of whatever that is.
To be fair, I think a lot of people still interact with crypto in that manner, especially if they're like trying to farm something. Daniel, unless you have something to say, I want
to ask one more question. I think we talked a lot about on the product side and like the ecosystem side of this, but I'm curious more on like, you talk about winners and losers in your article, Dougie, and on kind of like from the investing side, I think the question that maybe I'm curious about is, do winners look like, we have a lot of crypto native or crypto specific funds and investors and teams in XYZ. Are the winners those like cream of the crop of that bunch, or do you just see like more generalized fintech or tech or finance focused investors that understand enough about what crypto brings to these types of products end up being winners?
Yeah, it's a great question. I think so someone tweeted, I forget who it was, I read it first thing this morning, that like coincidentally YC seems to be behind like a bunch of like the successful like on crypto fintech apps that are like doing well right now. Even though like they're a fund that like historically has like been anti-crypto. And so like that for me is like a clear statement of like, we're not safe in terms of like, there will be non-crypto native funds who come in and start like taking shots, and they already are, and they seemingly are doing pretty well. What I'm suggesting is that crypto funds will not exist as a label. You're going to have to specialize within whatever we're determining to be crypto. Some funds will be really good on the speculative side, because I do think like that side of the space will continue. Some will be really good in the fintech side. Some will be good in other areas. But like just how, I don't know this for sure because I was probably not even alive at this time, but like I assume there were like internet funds back in the day, probably in the 90s, something along those lines. There's no internet funds today. Like if I tried to raise a fund on investing in the internet, people would be like, what are you doing? And my hope, and kind of what I'm suggesting in the article, is that in 10 years, if I say I'm raising a crypto fund, people are like, cool. What does that mean? What else? Like, what are you actually going to do? But right now, if you say I'm raising a crypto fund, like a lot of people are like, cool, that checks my box in terms of like, I need to allocate 2% of my pension fund to crypto.
Yeah. And you could probably say the same, you've got AI funds now, but what does that mean in 20 years?
Oh, AI will undergo the same transformation, 100%.
I guess, is there anything that hasn't? I'm thinking maybe biotech, health. That's kind of a specialized thing, but I guess you need a very specialized knowledge set for that, right? Versus like, I feel like crypto, internet, AI also is like, you can kind of just do it.
Yeah, and AI is something that like, really goes into so many different categories of products. Like you could have AI for education, and there's like ed tech exists. And so like when you have like a technology, in my opinion, that's like can be so pervasive across different verticals, like that's when eventually like just saying you're going to invest in that technology sounds crazy. Because if it goes so pervasively, like you can't possibly cover all these different use cases and understand each thing very well as an investor.
Yeah, it's like saying you're investing in AI, like at some point becomes equivalent to just saying you're investing in tech.
Exactly.
Like no distinction at some point.
Yeah.
I have one last thing before we end it, which is the Aave DAO versus Labs thing. I think quite a few of you might have a very strong opinion on this, so I'll open the stage to whoever wants to first share. Shall I pick?
I can go first. I have a strong opinion, although I'm not privy to all the facts to know whether this is my like end opinion, but at a high level, I think it's like kind of where I land, which is separating the cap structure is problematic. Like net, you probably get a higher enterprise value for Aave if Aave Labs is attached to the Aave token than if Aave Labs has an equity entity and then there's the Aave token. Because there's going to be some risk premium associated with like understanding where that value is flowing. And so I think that Aave Labs has been like generally a good steward of Aave. Like historically, there hasn't really been value leakage. The other component is that the history of Aave is lengthy, but in 2022, after V3 launched, the Aave Labs team started to build Lens and Family. And so they were making kind of this concentrated pivot away from Aave. There were a few reasons for that. Maybe there's a regulatory, maybe it was also the fact that like Aave token went up so much that like you're never going to justify that value, so you just had to go elsewhere. And a lot of, I would imagine a lot of the early teams sold. And so it's all to say like the cap structure is like very clearly a bit of a mess today as far as like Aave Labs has outside equity investors. They've moved fully back to Aave, have moved away from Lens and Family. And I think that's like net negative for Aave. And you can see that as far as like when Horizons was initially contemplated, there was this discussion of whether there was going to be a second token. Ultimately, there was enough of like kicking and screaming where they did not end up doing it, but there is a 50% revenue share. And similarly, like Board Ghost developers, the other major service provider, they're starting to explore their own monetization pathways that are going to be some type of revenue share. And so it's all to say, like, if you play this out long term, the value just continuously gets siphoned away from the Aave token to the equity entities because those people are the ones making the decisions as to how these products are going to continue to iterate. And so my view of this whole situation, kind of coming full circle, is that there's some legacy cap structure debt that we have to accept. It is how it is, and figure out how we repair it. In my view, is the easiest way to repair it is to pay people to come back in. And like putting aside the decentralization theater, Aave is like a bit more decentralized than other DAOs, but realistically, I don't own Aave, but if I did, I would be happy to get diluted, depending on what the amount is, to get the Aave Labs team to be a balance sheet company that holds Aave or whatever it might be, such that they're not seeking other monetization pathways, because the continued development of Aave is critical for the value of the Aave token.
Yeah, especially since I think Morpho is probably the most significant threat has had. I don't know when V3 was, and I don't know when Morpho started getting popular, but off the top of my head, I feel like it's a very significant threat. Also Camino as well, to a lesser extent. But yeah, I agree with that. Jim, you were...
Yeah, like, I mean, I remember seeing like Lens raised 3 years ago, something like that. And like, I was just messaging in the chat, was like, the funny thing is like, I didn't realize that it was like Aave Labs that was raising for Lens. It's just like Noah, like I think my updates have come from Noah updating the chat with like the governance proposal, and then also like some of the responses. There was like a bold tweet that Stani made about Aave, recently, like this week, about like Aave's going to win, right? And I just like quickly like Control F, search Aave Labs, and then search like Aave DAO. And Aave Labs was mentioned like 11 times in his like Aave will win, and Aave DAO was mentioned exactly once, all the way at the end in italics, saying that like thank you so much for your support, Aave DAO, which like kind of gives you like a less like it kind of tells you all you need to know about like what kind of what actually was being said without saying it. And like it's just a very interesting time for my way outside perspective on this is like what an interesting time to be having this conversation. You see Uniswap Labs trying to bring the Uni token and Uniswap Labs like under the same. I think Dan from Nascent made this like observation. I'm sure others have as well, but that's the one I saw. You see them trying to do everything they possibly can to make it like value accretive to the Uni token, and to have this like Uniswap is like the AMM, like the king of AMMs, right? Like Aave is like the king of lending protocols, and to see them going in like the exact opposite direction, like making the mistake that Uniswap Labs made years ago, and deciding that now is the right time to like do this versus like what Noah is suggesting, is like a head scratcher. Like what is going on here? Like why would you choose this path? And like I've heard that like Aave Labs is raising again right now, like equity on equity, and it's just like, what are we doing here? What? There's clearly an amount then, right? Like to actually also to Noah's point, there's clearly an amount of Aave tokens that like you could pay them, and then they wouldn't have to raise an equity round. I don't think so. Like, make it all one thing. Like for God's sakes, like make it all one thing. Like let's not go back. Let's not backtrack into like mistakes that have been made in the past. Like let's move forward and like be a steward of like how to make this work, not the opposite.
Yeah. Especially, I think if you're an investor, you want to invest in Aave Labs as well, right? You don't want to necessarily invest in Aave the protocol. To be honest with you, this stuff is so convoluted that I think most people shouldn't have to learn about it, to the point that if you're investing in Aave, you should be investing in Lens as well as all of Avera, as well as everything that Stani decides he wants to build out on the side.
Well, yeah, because like Aave Lab, like also on Aave Labs, right? Like apparently Aave Labs owns the IP. Apparently they own the front end. Apparently they own like the logo. And you get into this like issue where things look a little bit more like what just happened with XLR. Like, what do you mean? Like, what do you mean the team is leaving and being acquired, and the foundation is going to hire someone else to manage? Who are they hiring? How did they hire them? Like, who agreed to this? Like, isn't it their governance token? I would assume this would be a governance proposal of like who is going to take this over. There's just like so many questions that it raises, and like the answers are going to be unsatisfactory 99% of the time. Like, and I think nobody really thinks that they're not investing in the labs team. Like, right? Like, what do we say?
And this is like the issue with this vote that's currently going on, which is essentially like the DAO trying to claw back the IP that they probably should own. Is what's Aave Labs' reaction going to be if this is successful? I mean, on the margin, they have to be thinking, okay, I should be diversifying my revenue away from Aave DAO in some capacity or other. And so like there's no good like outcome from this current vote in its single iteration form, because either it goes the way of Aave DAO and Aave DAO owns more of themselves, or it goes the way of Aave Labs. But either way, you end up with misaligned shareholders going forward.
Just goes to show you that all of crypto is advertisement for MetaDAO. And on that note, Danny, do you want to wrap it up?
And on that note, Boccaccio asks me to wrap it up. And on that note, gentlemen, thank you all for joining us today. Jim, you said you wanted to become a regular, so we'll have to invite you on again. but it might have to be a requirement that Dougie joins as well. We had a very lively conversation today, and we can always pull in Noah. I hear he's always down for a good chat. So
we all work in the same exact office, so it's pretty easy to get us all together.
Yeah, I noticed you guys all have the same background today, so that's
one camera, 3 guests. Like we were, I guess, like one thing that we still haven't been successful at, Dougie. Like we were talking about it at lunch. Was like we see Noah in the chat. There's Boxer Noah in the chat, and then there's like professional,
media Noah,
media darling Noah, and we were trying to like pull the Boxer Noah into the
I should have just went straight at him with a take I don't even believe in, just to get him riled up and see if that worked.
We'll get him. We'll get you eventually. No, we'll get you to break eventually.
Yeah, maybe over beers, but on a podcast, I don't know.
I think he's known to be more easily excitable within the chat, but less so on the live podcasts. But who knows?
Which I think
maybe
is a good thing objectively.
it's probably good for himself. Yeah, maybe if you get him on a beer on a Friday afternoon sometime, late Friday afternoon, maybe you could get him more willing to comply to that.
We need a great character. We need a great character.
The reason I'm not bringing character is I have signs right next to my monitors. This is one of them. Oh, you can't see it. It says "Be nice."
Is that as a result of your?
I have one that says "Be positive" as well.
Very good.
Doing my
Did
best.
you write these, or did somebody else write them for you?
Oh, I wrote them.
Okay, that's very good.
He's been such a bear poacher that he's had to write those up himself.
What do you do with those when you're messaging in the chat? You just like kind of like it's like a laptop down. You just kind of just like get these out of here. Like I got stuff to say.
I forget. That's why I have to have the signs right next to my monitor. Every few hours, I look over it and it's like, yeah, I remember.
I'm in the bathroom tweeting.
Awesome. Well, we can close it out there. Glad to have you guys on. We'll have you guys on again sometime soon, I'm sure. And maybe, Jim, if you really want to get that result from Noah, you might have to raid his office and just tear those signs down one day before we go live. So that's always an option. But otherwise, until then, thanks to all the viewers for tuning in, and we'll catch you next time.
Thanks, guys.
See you guys.